Good evening, ladies and gentlemen. Welcome back to Walk the Block, where we are navigating digital finance. I got to say, it's good to be back with you boys.
Oh no, Zenith, you
Talk
dropped.
tonight about.
Give us that intro. You're glad to be back and talk about what now, brother?
Tonight we're talking about Ethereum. We got a lot of news coming out straight from Vitalik's mouth and some on-chain data for you that we think is going to be very, very interesting and could be some indicators of bullishness in the near future. Outside of that, though, folks, hi. Yes, Zenith, good to be back with you again, and I'm joined by the usual cast of characters. Up first, we have Mr. Tracker. How you doing, buddy? Out again? Oh, God.
Yeah, you're glitching again, Zenith. It's all right.
Boo. Apologies.
Yeah, man. Glad to be back, man.
Excellent. And we're also joined by Dace. How we doing, buddy?
Howdy, howdy. I'm good, sir. I'm good. I've been slammed, man. I've missed you guys. I've been out for longer than you have, and so work is good, keeping me very busy. Happy to be back.
Excellent. Glad to hear it. Well, outside of that, we are back to the usual, and the usual is saying hello to the good folks out there, including our buddy.
Uh-oh.
Always a pleasure, sir. So, with that being said, let's dive right into it tonight. So, up first, boop. We have Ethereum and Solana, very rare staking ETFs may launch imminently. So, the first Ethereum and Solana staking ETFs could debut in the United States within weeks following a recent filing by ETF provider Rex Shares that used a regulatory workaround. ETF and ETFs ever since their launch in July of 2024, with some industry executives arguing the product feels incomplete without it. So one of the interesting parts about this post is that they've actually filed this using a slightly different structure than all the other stuff. So you might notice that these are C corporations classified for tax purposes. What this does is it really just allows them to calculate taxes in a way that is most advantageous to the ETFs, but it is an interesting development because they're one of the first few folks to do it. And the other half of the article here is talking about how the crypto filterized because it could be very soon, could be later on, or as classic government fashion, they're going to push it out to the very last day of the deadline, which I believe is in October. So October is a big month for this stuff looking at the pipeline, but there is also a possibility it could happen sooner. So coming to us from Mr. Seyfried, he says, all this, assuming they launch in the near future, is a bunch of clever legal and regulatory workarounds to get these products to the market. There are pros and cons to the structure, but it looks like one pro is that this was one way to get some level of sign-off from the SEC. Is actually that by doing this, they can use 40 Act funds, which is a unique structure, and do not go through the 19B4 process. For those who don't know what a 19B4 process is, that's pretty much just standard processing for ETFs through the SEC. So because they filed this in a specific manner, it allows them to go a different route, which theoretically is going to help them get to market sooner. Gentlemen, is getting to market sooner a good thing?
Well, this feeds into a theory I have about when you look at the long-short ratio and all the open interest on Ethereum, which is your leverage positions, which in the short term and in the day-to-day are real movers and shakers about the price, right? My theory is that when we've got crypto at 3 trillion and then real estate, traditional finance, all these other financial entities are orders of magnitude bigger, 100 trillion plus, right? And you've got those players interested in coming into this smaller pool. They have the ability, if they so choose, to hold the price down with leverage, accumulate spot with one hand while they're holding it down with the other. And so I imagine that's an expensive venture, and they would like to do that as little as possible, which is why they would want to push it on through. That's my hypothesis.
Definitely. When it comes to those kind of leverage plays, being cheap is not part I believe we're back. All right. When it comes to the leverage plays, it's definitely a costly maneuver, but theoretically, if you are a big enough fish, it does make sense to kind of do that thing. Because remember, if you're talking contract options, you got to pay a fee to have the contract in the first place. So it doesn't come free. But at the same time, if that is actually what is going on, it could potentially pay off in the long run, assuming that the gains that are going to be made on the other side by buying as low as you can will actually overcome those fees incurred through the contract. Very risky.
Yeah, and you're talking about large institutions who, they've got quotas to make, they've got profits to book quarterly and yearly, but they also are interested, I would imagine, in an asset like Bitcoin. When you zoom out on Ethereum's history, on Bitcoin's history, it's hard to find other assets that will compete with its performance over time. And so forward-thinking big institutions are going to want to have a stockpile of this stuff before the rules are shifted and the game changes, and they can re-optimize how they want to play.
Most definitely. I think that this might sound like old news for some folks that have been watching the channel for a hot minute, because we've been talking about ETFs since like 2023 at this point, saying that all this stuff is coming down the pike. We're very excited for it. We have the Ethereum ETF. Now we're waiting for the staking ETF. It's a lot of the same old news, but we did want to focus. We did want to highlight this article because it's talking about a new avenue. It's great with the 4-year cycle and really experience some of those hyperbolic gains. If you can get those, it's like the idea of wave theory, which is that if you have a single wave and you have another wave, if you can get them to line up at the right time, those peaks will be astronomically higher than if they're out of sync or something like that. So I think that the sooner this can get to the market, the sooner we can actually see this stuff in action and we can see the effect through the market. But as it stands right now, 4-year cycle is looking at like first week of October-ish, is about 4 years out from the previous peak.
Hey, question for you guys. So I'm checking out some of the details here on it. So it looked like I thought they were going to these staking ETFs. So they're going to treat it almost like a dividend play. Is how they're translating it to TradFi. So are they truly going to be staking their spot ETF, the crypto that they hold, and stake it and then reward that in dividend plays to shareholders of these ETFs? Is that essentially what's going to happen here? Or is there more to it than that?
Jason,
I believe it's some permutation of that. Yes. I mean, like Zenith said, and like the article says, they're looking at a multitude of ways that they can file it to make it happen. And so I think what you've just outlined is one of the potential avenues to get it done. I think there's a couple of them that they could take, but I think that's the one they're currently working on.
Yeah, they're saying that they're going to invest at least 80% of their assets in their respective assets they're holding, and staking at least 50% of the holdings is what they're claiming. And then the workaround was because the ETFs will use Cayman subsidiaries to gain spot exposure. That's the workaround.
I wonder how that Cayman Island money got there. Who knows?
Yeah, so it's going to be interesting to see how they handle it. But then it's going to bring up the next thing that's going to come up. So the next thing that comes up is going to be whether or not, now that it pays dividends, is it going to come up again? Or is this treated like is the whole argument going to come out? Is it a security? Is it an asset? Or what is it going to be? So does the article go into how they're going to try to label these, since this is a new product trying to fit into a dated TradFi
all we have
documentation?
Pretty much all we have from the article is that it's pretty much an ETF. So from the user standpoint, I think it's going to be very much the same. I don't think there's really going to be much of a difference. This is really just focusing on the approval process and just trying to get it through while taking a different avenue for the approvals.
I will say this, the ones who have been early, you guys were asking if is early adoption best. And I will say this, the ones who did the early adoption, the ones that were providing the ETFs the earliest, certainly even before they were spot, had gained a lot of traction because they were first to market and they were able to get it out to customers. So if you're giving customers access to own something that they already want to hold, and you're going to tell me I get a dividend on top of that, where do I sign up? For any long-term holders, it's a no-brainer. Even if the fee is, as long as those dividends. Now, here's the other thing that benefits them too. If they're first to market, they can also have a more expensive charge on those ETFs, right? Those could be high. It could be at 2%, who knows, which is extremely high, by the way. ETF, like anything that's beyond 1% is expensive. 2%, even maybe 3%. Be curious what they're charging for you to hold their ETFs. But if those dividends are strong enough, then in your long-term horizon, yeah, it just honestly, the good thing for the overall market is if products like this really come to market on mass adoption, you're just building holders now, diamond hands, like, we like to say, that's basically what you're doing. Long-term investors and holders, like, I'll hold this. I'll be curious to see what those dividends come in at. I mean, if those dividends are coming in at 6-7%, that's going to be highly attractive. So I'm more curious about what the dividends are coming in at.
Well, and look, the thing is, if so 2 points, Tracker, you mentioned the SEC's view about the security status of Ethereum. Here's a quick little plug. Come join Walk the Block, ndf.com, and go to membership. You can join our private members only Telegram and get exclusive access to information as soon as we come across it. It's a growing group of folks that are like-minded. We want to get sharper, get clearer, get better at this stuff together. And so in our main chat, I've just linked a direct article stating what you've just asked, which is actually 4 days ago. This past weekend and the past week or so has been wild for crypto. About 4 days ago, it was announced that the SEC says proof of stake staking activities do not constitute securities transactions. So that was news from just 4 days ago, and it's why we're touching on this now. Like Zena said, we've brought up staking ETF features before, but it feels significant because this is the first time SEC has taken this legal clarity step, and this had to happen before the staking features of the ETF were ever going to come out. They're going to have to come out and say, hey, look, this is allowed, and so now we're going to do it, right? We can't do it and then come out and say it's allowed. And so this felt significant on the heels of some of the other news happening in the weekend. This quietly came out, and I was like, man, this is a big deal. And so wanted to mention that to you guys. We post this stuff as it happens in real time, and so come out and join us. But Tracker, that's the latest on that, and that's why I'm one of the many reasons why I'm very bullish on ETH right now.
Yeah, that's just one of many reasons, right? Because you're right. We have been talking about a lot of interesting things in our telegrams with our members, and we've been diving into a lot of good stuff. ETH is just it's not if it's gonna, it will. There's too much stuff pulling in different directions. Like those certain institutions are working overtime to keep that price suppressed right now.
Yeah, if I had to describe how this kind of space, which is slowly then all at once. So you get news, it comes out for a while, it feels like it's never going to happen, and then just boom, it hits and then it goes. I think that's what we saw with the Bitcoin ETF when it came out. We were talking about it for a long time, probably a year leading up to that event. And then it comes out, we have like a week or two lull of Grayscale largely selling and then a suppressing price. And then after that, it just ran. So I would not be surprised if something like this is possible as well, because the whole point of Ethereum is that Bitcoin is, that one's technically proof of work, but it's really just like holding assets in reserve. Ethereum is more that gas component of blockchains and the ability to stake it. Now that Ethereum has actually shifted over from proof of work to proof of stake, staking is one of the big attractors for it if you're a big player in the space. Right now, I think the advertised ETH staking yield is about like 3.2 based on what I'm looking up here. And with inflation, it's about 2.7. So if you're looking to do Ethereum staking, that's one of the big components that you can do to get it going. And once it's offered through the appreciation of the underlying asset, but the ability to actually yield on top of it, I think that's going to be something interesting for a lot of investors, especially considering that inside of the traditional finance space, you've seen a lot of stocks and a lot of companies through their stock holding options actually kind of have gone away from the dividend model. So having a dividend model through crypto might actually entice some of those old players who are used to that kind of thing to get into this space.
I agree. And I think you're going to have an interesting combination of folks that are used to bond vehicles, folks that are used to CD, banks that are used to offering CD products. You're going to have an interesting mishmash of people that these features appeal to in terms of potential use cases. And it's going to be very interesting to see how they intersect.
One thing I'll tell you about how the dividend stocks work, interesting, if it's going to be the same thing, is you can, there's strategies on this too. Actually, you can get in there with dividends paying stocks. So there's another strategy there now that opens up for many. I'll be more than happy to share that in there with our members.
Some of those strategies potentially look like.
What's that?
What would some of those potential strategies look like?
I'd rather I'd rather give it to our members, but the way it works is this. Okay. So you can literally jump in and out of various stocks. You're looking at, there's a lot of variables you want to look at. You want to look at when there's certain dates that are important. So the dividends get paid out to shareholders when they pull the records. So that's the most important deadline is. So if there's essentially, you could trade in and out of ETFs all day long. Like, so let's say you have a basket of 20 of them that are spot ETFs that, because eventually once one goes, there's going to be a flood of people coming to the market with it too. So what will happen is you'll get into one ETF and you can literally look at your time dates coming out and just spread them out on the calendar, rotate out of one ETF into the next one, capture the date, rotate out, go into the next one. And then you're just capturing dividends, pay out dividends as you go along. So I'm curious if there's going to be a time lock that they're going to require to doing it, because in the regular ETFs and regular stocks, there is no time duration. There's just a date that's set on when you have to have records to show that who's owning them, and then that's when people get paid out the dividends, and that's how it works. So there's there's a whole strategy about that too that's in TradFi that people would be doing as well. So bottom line is this: if this does come out, I will certainly be I will, full disclosure, be involved in them 100%. Now, with that being said, I will be also looking at those underlying companies who own those ETFs to see if their underlying ETFs truly track the underlying assets price, because not all ETFs are created equal. So that's another caveat. So if you don't know what you're doing in this area, you can get beat up pretty good. There's great ETFs out there that follow futures Solana. And let me tell you, most of them don't track the price of Solana. They jump all over the place, no rhyme or reason. So yeah, you got to know what you're doing in some of this stuff. When you dive into these things.
And Tracker, we're seeing that right now on the Bitcoin side with companies like MicroStrategy, with any of these stock tickers that have, basically converted their holdings into buy pressure for BTC. We're seeing them trade at, serious premiums against just buying Bitcoin. And so you're right. We're definitely in for some more of that as these things continue to sort of hybridize and cross paths with each other.
This might be a note for only the super nerds like us, but there is an interesting little wrinkle that happens in the options markets for traditional stocks, which is that whenever these dividend events come up, you actually see people that are willing to buy out of the money stock options, aka the price has not gotten to the level where it's technically profitable. Dividend is coming up and you have a relatively accurate estimation of what that dividend is going to be, then theoretically it can make up that gap, and it makes those out of the money options become in the money, so to speak. And it kind of creates these weird little like wrinkles or fluctuations inside of stock price, because people are expecting these things to come to help like kind of fill the gap on some of those weird options whenever those moments come around. So that
they work because they work because people are front running it. Depending on how attractive certain dividends are, that's the people that they forecasted it. They look at the past history, and what they do is they get in these things and they'll buy those they'll buy the call options right out of the money, knowing that there's going to be a run up in the price because people are going to be chasing those high dividend stocks, and that's what you typically see. So this will be no different. Now it depends, is the dividends going to be as attractive enough to get that run up? But I think just in general, just if you're going to be long-term, at least my strategy would be, if I'm going to own, and I full disclosure, I own spot ETH and I own Grayscale products, Bitcoin and Ethereum. And I can tell you now, those are extremely long-term. I mean, long-term, those are retirement funds type stuff. So I would certainly be looking to move into other things that are going to pay out a dividend. I mean, just sitting there, you're already making more just sitting in them. Of course, I'm not going to sit there and be in on those longs the whole way down either, but that's a different strategy we talk about, within our community. But yeah, you just got to look at everything. Like if you're going to hold something long term, why would you not get paid extra to hold? I mean, that's a no brainer.
It's true. The reason I bring up this weird little in the crypto markets, which is that when we do have these potential events of an actual payout date coming up, it has the potential to actually alter stock price or cause price movement in regards to trending up or down based on whether or not companies meet or don't meet their projections for it. because crypto does yield 24/7 effectively every time blocks are confirmed on the blockchain. It means that those yields are consistent, as opposed to traditional finance, which is like quarterly or even semi quarterly or like semi annually of the market itself. But it is a nice little wrinkle to throw in there. We can speculate about it for now, but once we actually see that kind of thing be implemented potentially, that could start causing some interesting movements in the market that we have not yet seen before in the crypto space.
The biggest thing here is you're going, and I'll reiterate it again, anytime there's dividends in the market, that makes investors feel much more comfortable holding an asset longer term. And think about what also was just discovered, was talked about a week ago. Trump came out there and reversed, basically crushed, the Biden administration's, block on trying to say that 401ks are not allowed to have crypto or should not have crypto because it's too risky of an asset. That now might open up also the 401k traditional markets to open up those things. So if you see that, and you see these things come into fruition, and you're seeing all the other stuff now, FDIC and banks can own this stuff. You're seeing, just more freaking fuel to this fire that hasn't taken off yet, even though the price hasn't been reflective. This is just one area of it that we're looking at. So even if you had, say, I don't know, let's say if you're a traditional financial mutual fund company, it typically based on your age is how much risk you take on. If everybody had minimum, I don't know, 2% of your portfolio in crypto, that's probably 2 to 5%. It's probably what most TradFi guys are going to be pitching to their clients, right? And if that's the case, I mean, good Lord, even at a 3% on 401k distributions across the United States, could you imagine how much price action that would put on, or liquidity? And I'm going to say liquidity, but basically a supply shock to the underlying fundamental asset is going to be just a 3%. It'd be insane. So these are the term holders, and that's going to also stabilize it's going to mature the investment will be more mature as well. It's going to add to maturity, longer holders. You're not going to get the fluctuations, and the prices won't be as drastic. Now, it might be bad for traders, but long-term holders, though, it's going to end up transitioning into it. So yeah, lots coming over these next few years. That's for sure.
You're going to lose any sleep over traders having their jobs be a little more difficult. But that being said, we do actually have a question here from the chat. So Siege Wolf says, as institutions accumulate large positions in Ethereum, asset centralization will occur. Now that staking is permitted by these large holders, are you concerned about the centralization of the validators?
I'll take that.
Do it.
I am a little concerned because the fact that what he's talking about is validators. So you have miners and validators, and basically the validators, you have to have a certain amount of holding of that asset to consider a validator. Validator is one who makes sure that the activity on the ledger stays in sync across the world. So what the concern here is, if you have more centralized powers taking over more and more validators, could they eventually manipulate the underlying asset by skewing the ledger because they've got the majority? I have a feeling, though, we're a ways away from that threat. I feel that I'm not concerned about it right now, and it kind of goes back to also the threat of AI and quantum computing, hacking the cryptography that's in the underlying fundamental security of the blockchain. There's a lot of people working overtime for these types of threats already. So I have a feeling, one thing that I will rest assured that the uber geeks in the technology world, I'll include myself as a geek as well. I know we all are here, actually. So they are working overtime for this. This is what keeps them up at night. So they're working around the clock and fight and working to try to, keep this as unmanipulated as possible, and also doing a lot of work in the quantum computing and AI counter attacks as well. So it is a threat, 100%. It's a threat. It's a concern that I definitely have been watching too. But like I said, they're also all seeing this, and a lot of smart minds from the crypto world, the true DeFi, the true underlining people that really know their stuff, the true leaders on the major assets, that speak highly about how true underlying crypto. But it's going to be a battle with TradFi. So it's really, are the technology guys going to keep things in check or not? And one thing that you do have here is, crypto is starting to have a huge, there's community is getting bigger and bigger. You just had the Miami conference last week. So when these people are making these changes, one thing you can see on the ledger is activity and what's happening. People are going to be all over this. One thing that will be blasted across all social media and people within these communities is the malice or the shady activity that they might be seeing forming. And I expect them to also bring together and really start to come home and get that message out across the board to try to expose that. So just like anything in this world, we're evolving, and the TradFi wants to take up as much as they can to lock it down, to make sure they still stay in control. So that's always going to be a battle to as long as people are on this earth. So, but yes, it is an underlying problem, but yes, I expect them still to be working overtime on trying to solve for those problems before they become a problem.
So to add to your answer, Tracker, I would go back to the first thing I said, which was, it's going to be an interesting mix of people that are interested in this. And also growing on the point we're about to go to next, scarcity drives value. And we know if you spend any time in crypto, that when price goes up, people are typically more interested and not less, because that price performance draws the attention and the interest. And so in the past, the things that have kept the Ethereum validating system up and running has been the nature of competition, right? It's been the free market forces. It's been people wanting to grab their share of the validator set. I would like to think that the thing that has kept it alive this far would continue to do so into the future, right? With different players and different sentiments and different tastes in play, it's always a consideration. But something that has existed will continue to tend to be more likely to continue to exist as it moves on into the future, and continues right every day to not go to zero. And so we'll see. I think that it's going to drive a lot of demand. Once these rules are set, right? Once the rules are set and people know we can invest here, we'll get these types of dividends in these ways, all the legal framework is down, I think the temperature will change in the space, because institutional and big players are going to know now that, okay, here is the legal clarity. Here's where the ground rules are. Here's where we can play. Here's where we can't. And then it's going to be a whole nother level in terms of competing comfort level for people to get in. And now it's all of a sudden it's going to be much more of a competition and a lot less of a how much liability do we want to take, right? It will definitely change the tone of the conversation, I would say.
For sure. Crypto is an ever evolving space as it is right from the rule set that's largely driven by the SEC inside of the United States. Granted, it is international, so other jurisdictions will have their ability to kind of shape how we interact with these things. But overall, because the landscape is constantly shifting, I think the threat perspective is also shifting as well. I think centralization of validators is a good one, a good example of this, and it's also multifaceted, because you have the potential for centralization to become an issue when it comes to control of the network. But at the same time, it also changes even because price appreciation is one of those things that really drives attention and interest in the crypto space. Whenever price is driving up, that potential thing to hack or crack or get your greasy little mitts on is only growing more and more. And if things become more centralized, then it also theoretically means, from the hacker perspective, it means that you have to hack less addresses to get a higher reward. So centralization could actually be it could be twofold downside in regards to the user. Obviously are losing not quite authority, but there's centralization of the blockchain validators. That is one. But also at the same time, from the hacker perspective, if it is easier to take down more validators at once, that also proposes new upside risk towards the overall blockchain itself.
I like to inject here too. So you brought up a good point in that centralization. I know that one big threat that corporations are having a big problem with right now, and I know big corporations have already been running into this, is the hackers are 10 steps ahead of all institutions. They're moving at an alarming rate. Like it's almost alarming because there's more hackers now. And in certain countries, you're almost applauded as a Robin Hood type mentality, to where it's almost rewarded. So I think the bigger corporations are going to have bigger problems. I mean, keep in mind, Coinbase was just exploited, right? They just were exploited about a month ago, and they're going to pay out
release.
Yeah, they're going to pay out their, I think, some of the U.S. customers and other ones that they're going to try to handle, but that's just to keep face, right? They didn't have to legally do that. If you look at the policies, it states that if they're not necessarily held accountable if certain things leak out, which is, I think, crazy to me. So, but once again, most people don't realize this until after the fact it happens. Once again, not your keys, not your coins, right? It's what we've always preached about as well. Central exchanges are great for onboarding, offloading and onboarding, but at the same time, they're great also for cutting down on transaction fees on various networks, mainly the Ethereum network. They're great for that. They're great to have things peppered across. Even some central exchanges are great for retirement funds and different tools. They're fantastic, but keep understand this. And that's the other thing. Crypto is still not insured yet. Now it's coming. It's coming. The FDIC is going. It's going to eventually be insured up to probably $1 million, which is most people's portfolios and how traditional TradFi works. But the hackers are gaining at an alarming rate. They're draining people left and right. Matter of fact, I was getting those texts. I had an old Coinbase account back in the day. I was getting spooked by that, saying your thing has been compromised. Click on this text link and all. I mean, it's so easy. It's not even a challenge for these scammers anymore. If I wanted to do it, could I do it? 100%. I know I could do it, but I have a conscience, and I'm not a thief. So but there's a lot of people out there who aren't. They don't have that, that empathy or that concern, and they do have the technology. So it's one thing that security is one big thing that I don't even think, honestly. I don't think these companies have any clue what they're going up against, but you fight hackers with hackers. You fight AI bots with AI bots. You fight, everything's counter-fought. So you're going to be in this big war going on here, but these central exchanges are going to have to start really beefing up their security more. They think they have it under control. They don't. There'll be exploits, though. That's going to keep happening. But the centralizations, I think the big institutions are going to be the biggest threats. And FYI, and some of these, a lot of times it's just old-fashioned social engineering. And that's always been a loophole that most of these companies still will always have. Don't underestimate the cleverness of a hacker with an employee who's just tired at the end of the day, just wants to go home. I mean, it happens. But to go back, I know I'm going off tangent a little bit, but I know you guys are having some really good conversations here in the thread. So let's bring up some of this activity, because it's definitely sparking up some really good conversations.
Absolutely. From our good buddy Paul Sachs, he says, the trail of imaginary horribles. Does centralized corporations like Lido controlling 70+% of Ethereum validators, them getting court orders to blacklist addresses? Is this a valid future concern? Well, I see someone has been getting into the stablecoin bill, the Genius Act that was put forward recently. There were some folks out there that realized that, oh, look, there is actual provisions in here. So, I mean, to take it first here, yeah, I think that's always a potential risk. Whenever you're specifically, there is a new avenue for governmental authority when it comes to the crypto space through the Genius Act. I still got to do a little more research on it to figure out how realistic of a threat that is. But at the same time, though, I think the course of history shows that when you grant power to authorities, oftentimes they will exercise it. Maybe not immediately. Maybe it's going to take a little bit of time for someone to realize what they can do with it. But yeah, it's a all you really need to do is just wrangle the big players in that space and be able to control them.
Yeah, but I'll also take it a step further. There is different varieties now out there. Countries are fighting for citizens. Hell, United States are fighting for citizens at this point. And we've been joking about this, about somebody needs to start a heat map or a competition matrix table that kind of outlines all the different countries and all the different states to see who offers what up across the board from all the things we talk about, because places like Missouri flirting on very highly flirting with the idea of not giving any capital gains on your tax on your crypto, which is huge. It's a big underlining. And then you have other countries out there, El Salvador, of course, everybody knows Dubai, Portugal. These are already good crypto havens. So if other people want to make it difficult, then other people will step up and be more than happy to take over those people for coming, citizens and becoming our dual citizens. So that's one thing that these countries understand. And I think this new administration understands that too. They keep saying how they want this to be the crypto capital of the world. England has actually made that comment as well. Well, unfortunately, you as a person on this earth have many different varieties, very options to choose from. So if that means you're doing business 24/7 over the internet, you can live in any country you want and still just, pull in some of this profits in the crypto world. So you're going to have to be careful and tread lightly. So if you start doing malice acts like this, once again, I go back to what I'm saying. The people in crypto are very on top of this information. They will blast it across everywhere and make sure everyone's clearly aware of what's going on in this world. So that's one thing that I think countries cannot just bully people around. I think they got a taste of that over the last 4 years, and they've kind of had some major backlash because of it. So tread lightly. You're going to try to lock it down, but there's a fine line.
Agreed. Dace, any thoughts on the matter?
I think the interaction between the government and finance has always been an interesting topic when it comes to crypto, given its origins and how it works. And so some of these wrinkles are going to be interesting. It's going to be a testing of putting the government's money where their mouth is when they're saying, hey, we want crypto. We like you guys here. We want America to be the center of crypto, but what are the guidelines? What are the stipulations? What's the fine print, right? And so we're watching this unfold in real time. We'll see what policies change around the issues. And there will always be some imminent threat. That's the nature of life, right? We're never going to get to a place where crypto has arrived and everything is perfect. But I do think we stand a good shot if we stay here and pay attention to capture some value and some price appreciation. And I also think I've got other personal interests in other projects that have forked Ethereum, right? For some of these reasons, for the reasons of censorship, freedom of movement, freedom of transaction, things like that. We'll get into that some other time, but that is a real concern.
For sure. By the way, for the folks at home, if you want a little balance the idea of you have an actual physical location in space, which is going to be inside of some country somewhere, which has jurisdiction over you, versus your digital online self, which could be anywhere in the world at any given time. The book, The Sovereign Individual, is one that actually talks about this very extensively. It talks about the idea of moving into the future with the digital age revolution. There's going to be a competing interest where individuals get to the level where they actually rival the power of nation states. And you're going to see digital nomads, which is people that are looking for the best treatment, and they're able to go pretty much anywhere in the world. Especially players that size are going to have the ability to move anywhere they want to. They're going to be able to move their corporeal form, that physical meat sack, to any given country that's going to treat them the best. So The Sovereign Individual, good book, big brain book. Highly recommend it for that kind of stuff. And by the way, Siege Wolf.
Sorry, go ahead.
Siege Wolf does have another good comment here. He says, Tornado Cash interaction will be handled at the centralized exchange. Ban the on and off ramp. Existing U.S. law does not address an interesting idea as well, which is that as of right now, there are very, very few and limited ways to get money on and off of crypto, which is how you go from cryptocurrency to being able to spend it in the most accepted forms of payment. But there could be a potential form in the future where we actually see DeFi adopted to the point where you don't necessarily need to off-ramp crypto in order to be able to pay stuff like your rent and whatnot. But yeah, this is an interesting idea. The idea that the centralized exchanges are still the choke point and could be used as such.
And one thing that people need to understand is these countries aren't stupid. They know most of their taxes and their money come from a very concentrated small amount of people that make up maybe 5% of that country. That makes most of their taxes that come in at 10%. They want to keep beating them down. They have by far enough means to easily jump around and move their money around and that's more money being lost by those countries. So the people who have money have smart people around them to protect their money. So I'm saying it doesn't take a mass exodus of people leaving a country. If you're losing the right people, who are the millionaires plus clubs, those are the ones that really hurt the countries.
Agreed. I think, I want to say it was France recently that actually tried implementing a wealth tax or some sort of like hyper tax on hyper affluent people, and they actually saw a large departure of their billionaire and millionaire class from the country as a result of those taxations. So yeah, you're entirely right. It's something we've seen before, and if it's implemented in the crypto space, wouldn't be surprised to see it again.
Most of these people can already have multiple they have multiple ways already set up. They just have to flip a switch and they're already in another country, or they already have dual citizenships around a lot of different locations, or offshore accounts, or. I mean, people who have that kind of money are surrounded by very creative financial individuals that will make sure that their money's not going to get taxed to death, because that's what they get paid to do. So once again, governments are always 20 steps behind people who are on the cutting edge of being innovative. And I guarantee people who are very wealthy, who are getting into crypto, have the cutting edge CPAs and tax advisors that are already planning all this stuff and knowing that what's coming down the pike, they're already 2 steps ahead. So yeah, so countries have to tread lightly.
Agreed. Alrighty, gentlemen, let's keep this show rolling. Got another article here, courtesy of Dace, by the way. Excellent work, sir. We have Ethereum supply on exchanges hits a 7-year low. Is this a breakout loading? So with that being said, let's go look at the actual data here. So hopping over to Glassnode, we have the circulating supply on exchanges. And what excuse me, this is the wrong chart. This is actually an important one. This is total supply of Ethereum, which, by the way, has started to become slightly deflationary. Had another little bump, more deflation there. But this is the one I was looking at. So black line, that is going to be your Ethereum price. Blue line, this is the amount of Ethereum. This is the exchange reserve. So across all the exchanges, this is what we're looking at. So
is this the historical one for exchanges? Or does it go back further?
Yes.
Because I think, I didn't know when central exchanges started, pulling this data in, or how far back.
Wanting to see all of it, unfortunately.
Okay, that's fine.
The point being, though, back in July of 2022, we saw about 30 million Ethereum, not dollar amount of Ethereum, raw Ethereum on exchanges, and now we're looking at about 20 million.
Half. Yeah.
So about half there, yeah. But the point is that what we're seeing is that Ethereum is moving off of exchanges. This is something that we've talked about a lot, which is liquidity. The price is not necessarily driven by liquidity pools, meaning that price appreciation happens in those liquidity pools when that balance beam gets out of whack, and then you have to adjust price to compensate for that. So when the supply of an asset gets lower on an exchange, those are times of low liquidity, or you could also call them potential large price movement times as well. It can go up, it can go down. It depends on which way the market decides to move it. But this is a trend that we've been seeing build for over the course of like 3-4 years at this point, and it looks like we might be gearing up. I happen to think it's going to be the appreciation side of the house because of market forces going on, whether it's the 4-year cycle, current trends, talking about the moving averages, 20, 50, 111, and 200-day moving averages. I think that this is a potential towards the upside. And based on what we've seen, the article that we're talking about here lays out exactly that. So Ethereum is currently trading at a critical conjuncture, consolidating around the $2,500 mark after a strong rally that began in April. Many investors believe this consolidation phase and setting the stage for a broader alt season. The recent pullback has been orderly so far, with price action respecting major support zones, and market participants remain cautiously optimistic.
Ethereum's a coiled spring right now. Literally, the chart is. It's a bull flag. I mean, if you want to break it down to TA, could we go lower? Sure, we could go lower. But you just had a major move up. There's a consolidation sideways, and the actual price, it's coiled up pretty well. And like the article is saying, yes, it has been respecting those key levels, and it seems to be holding. It's actually held up better than Bitcoin on the pullback. It's been showing to be performing slightly better. Now we've seen this play out before, and we know that the ETH to BTC ratio, we've seen all that. But specifically, what we're seeing right now is Ethereum's holding up, and it's just news article after regulations. Everything is all in favor of Ethereum. Macros with the tariffs and things like that, those are going to be off on news articles. You can't control the macros, but what you're seeing is the fundamentals being laid. Administration's bullish. FDIC tells banks they can own crypto now.
I would largely agree.
401ks are going to start probably adopting it to their customers. Smart contracts with yielding for dividend plays and ETFs are starting to form. we're starting to see now companies starting to load up Ethereum specifically, as well as Bitcoin they've been, but now they're starting to move into Ethereum and pulling that on their balance sheets for various ways to try to leverage. And yet still the fundamental of the dollar is weakening, or the dollar itself is getting worse because everybody knows how bad it is. So companies are going to, now that you can own, that's the other thing that changed earlier on too, was on your balance sheets, you could not really, it was more of a liability to own crypto on your balance sheets as a company. Now it's not. So I know that made I'm sure that made Michael Saylor very happy, when the cat came out. That came out a while ago. But you just keep adding up all these things, and it's more like, how is Ethereum not at like 9,000 right now? That's really the thing that's mind blowing to me.
Jacker, particularly with this news we covered from Friday about the announcement about how the SEC views proof of stake, staking activities as not securities. I agree. I think it's amazing how cheap it is right now. I think that the difference between, so the chart you just showed had the supply on exchange, and so looping that chart in with Siege Wolf actually had another comment here. Says ETH holders may benefit from short medium term price appreciation via instant demand, but the network will be controlled by private banks in the long term. In many ways it is already. Some prefer this. I think you're right about that, and I think this chart shows an interesting splitting of the opinions when it comes to Ethereum. There are those big boys who are going to be buying the ETF, vehicle, and then a lot of the folks clearly here. I mean, if you're taking your ETH off the exchange, you're not letting them hold it and earning yield through their centralized methods. So I bet a lot of these folks that are taking their ETH off exchange share your sentiment or your hesitance about who will be running the validators moving on into the future. And so you will see a furthering of this divide between those who believe in self-custody and those who are comfortable having somebody custody it in exchange for some set dividend or set, staking return. So I think that conversation will only get more lively as we move down the road.
Definitely. I think that right now, if I had to put my finger up in the wind to try to tell which way, let me put it this way. There's two camps. There's the DeFi camp, who are the people that are very much not your keys, not your crypto. And then at the other side, we also have the people that are new to the space. I think we're going to see a bit of a gold rush, and we're going to see a good influx of first-time purchasers, whether it's people actually using ETF products or maybe just going the classic like Robinhood route, where they don't even own the crypto. They just own an affiliation with crypto held by someone else in reserve effectively. So as it stands right now, I think the DeFi crowd is not winning yet. Winning some sort of intermediary, very similar to how people have managed their stock portfolios in the past, whether it's through like E-Trade, Fidelity, Charles Schwab, all that kind of stuff. They don't want to necessarily do everything themselves and risk everything themselves. I think personally, it's a bit of a facade or a false claim of security that because I have it on the centralized exchange, I should be protected in some way. It's like, well, you're also opening yourself up to different, there's pros and cons to everything. Different threat vectors for that. You're probably not going to get personally hacked, but centralized exchanges have failed in the past. I think they're becoming actually kind of centralize on certain ones that they see as good, whether it's Coinbase, Binance, Kraken, Gemini, all that kind of stuff. But as it stands right now, I do think that self-custody is not as hot as we'd like.
Well, I'll back that a little bit, Zenith, and that is, I'm a believer you're going to have a variety to choose from. And really, it's going to come down to the people who stay on top of this and know what's really happening. So I'd say probably would you say 80% of crypto people in crypto have no clue how crypto even works or how these things, or even have a clue what's going on behind closed doors. I don't think they do. I don't think they understand about the things we're talking about right here, where you're going to have essentially the banks are trying to move their tentacles. There's a reason why the SEC was suppressing the prices and holding off the release of these products. They stymied everything to allow the traditional markets to get their hands into the pot and try to get as much control over it as possible before they let it go. Listen, if I controlled most of the world's wealth, I would want to do the same thing. I would make sure that I'm not going to lose control. And this was a threat to them that they realized. So this is why they did it. They use governments and all types of things to leverage to get to what they want. And they did that rightfully so. But here's the other part of it. The people who can navigate through all of this mess and understand the movers and what's happening will be able to absolutely profit off of this. I think you'd be crazy. I mean, you have 401ks. You're going to be hostage TradFi until they allow you to actually own crypto. Now, there are 401k tools out there. You can own crypto. Once again, it's still a central exchange. There's no 401ks tied to DeFi right now, period. And if there are, it's illegal. I can tell you right now, it's illegal if there is. But you have a lot of tools out here and a lot of things at your disposal. That's the thing. Just like is paper fiat money going away? No, I do not think paper fiat's going to go away entirely. I think you're going to have a variety of what people want and what's out there. And if you can navigate through this, you're going to be so much further ahead of the crowd to be able to capitalize on it. And that's the best thing that we're trying to do here on these shows, Walk the Block. We're always trying to inform, challenge us by having these great conversations about it so that we're not just blindly thinking we got it all figured out. Anybody that tells you they got it all figured out is the first person you need to shut the door and walk away, because they don't know what the hell they're talking about, because nobody does, because it's changing so rapidly. I mean, think about what's happened just in a time frame. If you would go back and just think of all the major events that happened in crypto since 2022, that seems like a long time right now. It's only 2.5 years ago. Man, it's you try to write a movie on that stuff, no one's going to even believe it. There's so much stuff that's happened just in that short period of time. So it's happening at an alarming rate. But what you're seeing is a dated banking system that had a lot of control that's starting to lose some of the control. They're still going to retain most of it. They're still going to retain a lot, but the stuff that's leaking out that gives those other people an opportunity to capitalize on it, that's what we're trying to do. I mean, listen, the banks are still going to control the world. They're still can control anything. And anybody wants to have that debate with me, I'll be glad to take it with you. There's a reason why the BIS is in the position they are, because they are the 8,000 pound gorilla that no one can take down, because they own everything. Yes, everything to some extent.
Yeah, I think that this is the first mover advantage in the space right now for the users anyway, which is that, yeah, like you said, nobody has the space figured out. I mean, like, shoot, Hyperliquid was the token that recently was the darling and did like a 3x over the course of the last month. I didn't even know what the heck that was until I saw it at the top of the charts for like 3 weeks straight. And I was like, all right, maybe we should actually go look into some of this stuff. But I think the first mover advantage is going to be for the people on the user side that are able to navigate the space, actually take the risk of learning is to some degree. But at the same time, though, risk equals reward. Well, smart risk anyways. So I think that's where we're going to see the first mover advantage here. Learn how to do it first. I know Bitcoin's been around for like, 12, 16 years at this point? 16 years, I want to say. Yeah. But we're still early. If you can figure out how to do it, I think there's still a lot of great upside. I know AI is scaring everybody. Traditional finance is scaring everybody getting into the space. But at the same time, though, there are absolutely avenues to win. We just got to find them and understand how to work them properly.
And just be clear here, the uncertainty is what those early adopters are able to capitalize on. Once everything is clear and it's all green sailing and there's no more storms, the money, the good quick money to be made, or the money you can make, has already been gone. Because at that point, you're going to get some moves, things are going to go up, but they're not going to go at the alarming rate, because it's become more of a matured market. When you're in a very early non-mature market, that's the times to capitalize if you can spot it, which we are always on top of this, spotting it. So, and then our users are always seem to be on point too as well. So we always appreciate the whether it's agreeing with us or a contrarian take. I love it. Great conversations.
For sure. By the way, gentlemen, we do have one final article we got to get to. We got to go to the source. We got to go hear from the horse's mouth. So coming to us from Crypto Potato. That's a hell of a website. They say everything hot in crypto. Get it? Coming to us, Ethereum to scale layer 1 by 10x in a year, says the big man himself, Vitalik Buterin. So the Ethereum co-founder confirmed the plans during a panel discussion at ETH Global Prague. Over the next year, and a bit based on delayed execution, he said. When asked why he preferred a slower approach, Vitalik said a year would be the best implementation timeline, while acknowledging that some people are more aggressive and want to skip the pause and commit to scaling 1,000 times right away. He emphasized that he supports a more cautious and structured strategy. He further examined that this execution depends on upgrades like mobile log-level access lists, networking level improvements, and distributed history storage. Vitalik noted decentralization is still strong. During this pause, he suggested a hard fork to fix remaining issues like account abstraction, censorship resistant, virtual machine improvements, protocol simplification, and switching to single-sided liquidity. Oh, the final article here, we're talking about bigger things happening for Ethereum. It sounds like Vitalik is getting serious and actually talking about the scaling, because they address down at the bottom of the article. Charles Hoskinson even gets in on this and says if they can't figure out that L2 thing, they might not last the decade.
Well, I love the article. Oh, so go ahead, Dave. Sorry.
I was going to say something that stood out to me was them saying, if you scroll back up, he says something about like, we may have to hard fork for, where did that go here? There it is. Hard fork to fix remaining issues like account abstraction, censorship resistance, those two things. If you go down to the next phrase, however, he clarifies that zero knowledge Ethereum virtual machines are ready, the network can progress further and faster. Those two things don't line up, right? Like either zero knowledge provides some of those issues, some of the listed desirable changes, or the hard fork is needed. And so it feels to me like Ethereum doesn't want to come out and say, we're going to stand behind privacy, we're going to implement zero knowledge on the main chain. And they also don't want to say they're not. They're trying to not play both sides until, I don't know what, maybe there's more legal clarity, maybe there's more adoption from the governance side, maybe until they pass the laws, who knows. But that was what stood out the most to me was, because in previous releases, they have gone back and forth with, will we have to hard fork? Do we need privacy? Okay, yeah, we do need privacy. And now he's coming in saying this, which is interesting because on one of his more recent X posts, I guess from less than a month ago, he went about detailing new tech upgrades that will allow Ethereum natively to have those privacy features. And so the question is, are you going to pull the trigger, right? Are you going to do it? Or are the institutions that are looking to adopt you going to keep you from making some of those privacy decisions? That will be very interesting to watch.
That's true. And to give the guy some leeway, because he's building the tech, when he's talking about the zero knowledge virtual machines, that's a reference to a specific type of cryptography that goes on, which is that you have developed a way that each party can give some sort of signal without giving their full information and still get actual safe encrypted transactions authorizing. But it's possible, but I think that this is one of those situations where when the tech's ready, the tech is going to be ready. As it stands right now, it doesn't look like it's ready. So, I mean, at the same time, though, the clock is ticking. So if you can get this out quickly, I think it'll help. If it's going to take too long, I think you might get swallowed up by the bear market, and these kind of upgrades are going to go unnoticed.
I've seen some great articles on what Ethereum could do. And the first thing is Ethereum Foundation leaders just seem to be a bunch of, they don't seem to give a damn about the price of Ethereum. Now Vitalik is back. I mean, the fact that they're allowing L2s just sponge off of them, they could easily tax the crap out of the L2s to sponge. That's immediate fix right there. Bam, that's revenue coming in. You're not allowing L2s just to kind of, milk you for all your technology, and you're not taxing them, and that's crazy to me. There's other things they could do. There's so many things that Ethereum Foundation players can do to set them up in a better. That's one reason why the price. That's probably the biggest reason why the price is not at 9,000, like we stated earlier, is because they haven't been trying to protect the Ethereum price. There's actions they could take right now. They don't seem to be taking them. Now that Vitalik has gotten more hands-on and he's back in there, it's going to be interesting what's going to happen. But but the U.S. has already said they're going to be a crypto reserve, and they said it's going to be more than just Bitcoin. I'd be shocked to see if Ethereum's not in that basket, meaning the number 2 market cap. So it will probably most likely be in there, unless it's just something crazy. I'd be shocked at everybody if it wasn't in that. But So the government regulations are going to be constantly circling the wagon and trying to manipulate it, whether it's good or bad. And this is where I think some of the concerns coming back with Ethereum, are they going to be more controlled? Are they going to be stymied by what governments are going to allow them to do? They're fighting a big battle. I mean, Bitcoin is just out there. Ethereum's got a foundation and all, so it's going to be much under scrutiny, just like the other large ones like XRP, Solana, and so forth. So they've got to answer to that. And on a side note, I just want to bring up, so roughly there's only about 10% of people in crypto are in DeFi. 10%. So 10%, 90% are on central exchanges. So there you go. Little caveat side note.
Absolutely. No, it's true. It's true. And like, to put it in a reference, right? We, the three of us on this panel were so nose into it that it's good to hear that reminder and gain that perspective track. Putting in the perspective of the other articles we've covered, one big note and the big takeaway from this on the plus side or on the hard data side would be the transactions per second, that he went out of his way to be like, we're aiming for 150 to 300 TPS or transaction per second per second, and they're currently at 15 to 30 transactions per second. And so if the institutions are buying right while they're suppressing the price, if people are moving their money off exchange at record rates, and if the U.S. government is coming out and saying, hey, we're assessing this differently and you guys are not securities, it's in Vitalik's best interest to say, hey, institutional players, we can do more business, right? We have plans to do more business than we currently, to grow our capacity effectively. And so it really makes sense in terms of the timing of things, right? Both legislatively and in the news, and also from some of the decisions from the SEC.
Agreed. When it comes to what's going on with the Ethereum price, I'll offer this as a final note for me on this one, which is that I understand the narrative that the price has been artificially held down by institutions, by leverage, options trading, all that kind of stuff. I understand, which is that this cycle has largely been an ETF cycle for Bitcoin. We have seen, and pretty much up until this point, I think Bitcoin has still been largely the big winner of this cycle. And I think that right now, the money is just flowing into Bitcoin and not into Ethereum. I think the L2 issue compounds the price appreciation. I think that some of the other stuff that we talked about, which is like people actually trying to suppress price, has also been largely effective due to the L2 issue, which has not been driving Ethereum to be deflationary. In fact, the supply has been inflationary for a large amount of time now. And I think that there will be a point this cycle where Bitcoin stops being the darling and people get into the DeFi space. As of right now, I think that DeFi is largely underutilized and people are just not interested in it because the focus is still on Bitcoin.
Well, Bitcoin's getting all the love in the mainstream media, right? You ask everybody on the street, oh, wait, name me a crypto, everybody knows Bitcoin. I'd be shocked. I mean, honestly, you say Ethereum, maybe 2 out of 10 might know it. I mean, maybe. Hell, I'd probably say in the United States, probably more people have heard of Solana than they've heard of Ethereum. I mean, at this point, because it's just,
I don't think you're wrong.
It's been in the news more. So it's good. We're coming up in a very fun time here, is what I'm saying. And Ethereum is absolutely powder keg, ready to go. And right now, there's more upside to cause it to go up. All it takes is ETFs starting to buy this. We already seen companies coming out saying they're going to put massive amounts of money. When I say massive, we're talking $1 billion, $500 million dollars worth of actual accumulation. That is going to gobble up what's out there quickly. Just curious, Zenith, do you have the ETH to Bitcoin ratio by any chance? I'd love to see what that looks like right now, because right now it's funny how I mean, ETH is up, Bitcoin's kind of flat. I mean, this seems to be a narrative that keeps playing out. Bitcoin keeps looking like, Ethereum keeps looking like, over the last couple of weeks, ever since Ethereum had that big move, a few weeks ago, and it's been going sideways consolidation, it seems to be holding up much better against Bitcoin and others. So it's getting there. Yeah, let me see. Here's okay, good. So you see that massive just beat down that Ethereum has taken since 2022, but look at that big move. And we all keep joking here. We go, all right, it's a great time to do it now. It's a great time to do it. And we've been saying that now for, probably since Q4 of 2024. It's about when we've been saying it, but it's just one of those things that it's more disbelief that it's gone this far. It feels like it's so exacerbated one way now at this point. The price has been down, suppressed. We've been watching the put and the call spreads, and on the leverages out there. We watch that closely. We get into that in much more detail than we do here with the other folks on our daily streams with our members and stuff. So, but what you're seeing here is a chart that looks like it's starting to maybe turn around. Now, is it the end? Who knows? But right now, over the last minute, it seems to be holding up more better. And then also on top of that, crypto overall compared to the overall market seemed to be responding even better. It was almost like it was trying to like feed off of gold almost. Like gold's had a huge run because it's in a perfect storm for gold to just do very well on this uncertainty with the dollar weakening. Now you're seeing these moves here in crypto. And if you look at, you don't have to bring this up, but if you look like, say, at the Bitcoin to gold ratio and things like that, it's starting to make moves. So and a lot of people are in gold, they've done very well. Well, some of these people will start to rotate out of gold and go after laggers. Well, Bitcoin's not necessarily been a lagger. It has lagged. I mean, you look at it compared to maybe some of the move that gold's had a little bit recently, but Ethereum has greatly lagged, and it's the second largest market cap crypto out there. And with all the news we're talking about, so you can paint narratives. We can tell, like our friend Will likes to say, fires, what is it, campfire stories? But there's a lot of campfire stories. There's a lot of campfire stories to talk about when it comes to Ethereum, though. So, full disclosure, I'm heavy Ethereum right now. Just FYI, I've been heavy Ethereum. Really got heavy over the last, 3 to 4 weeks. Got very, very heavy. Much heavier than I'm in Bitcoin, which is very aggressive. Does it pan out? It's okay. These are very long-term holds. I mean, many year holds, or until we get towards overbought territories for the long-term cycles, whichever comes first. That's pretty much when I say long-term. So.
Very true. Very true. And by the way, you're not alone. I've been heavy Ethereum since pretty much I've been in DeFi getting back in what, 2022? Yeah. So you're not alone. I think a lot of people out there in our as a bit of a backbone of a portfolio. Granted, unfortunately, this cycle, Bitcoin has proved to be a little bit better in that regards, but at the same time, not crying about it. We'll be all right.
Yeah. Well, what I was saying was like I've rotated out large portions of Bitcoin into Ethereum. That's what I'm going with.
Oh yeah, same here. Yeah. At this point, honestly, I'm 0% Bitcoin. Gotcha. Everything is rotated into the alts, getting ready for that kind of stuff. Had great appreciation through Bitcoin. I remember, it was like summer of 2023. I think I was telling one of my tried to get in, and then just kept going up and up and up. And then we had the ETFs come out and just went to the moon from there. So it's like, yeah, you can get some good appreciation in Bitcoin, rotate it, really cultivate that crypto. To shout out one of our mentors there, which is that you don't really care about the dollar amount as much on a day-to-day basis. Just look at the raw number of coins. More coins equals more better.
I remember being at a company function in Q4 of 2022, and me and one other guy who was he'd been mining for years in Bitcoin, and we both were talking, and everybody was listening to us thinking we were just like nuts. And we're like, dude, if you don't own any crypto now, man, right now it's so beat down. Like, how can you not be getting into this? Like, there's so much opportunity to the upside. And they all looked at us like we were just nuts talking about this, just like, oh, whatever. And I was like, well, I said, well, if this was 2017, I would understand your hesitation, but something in Q4 22, because think about how it's beat down it got. We're down. Ethereum got below 1,000. It was down to $800, $700, and Bitcoin was down like 15,000. I mean, it was so suppressed. I don't know at the time of that event it was at the low, but it was right around that time where it was. And you looked at the on-chain data, and it was like, oh my gosh, every chart was telling you that it was so oversold. Everything was, and it's like, if we're seeing that, everybody else is seeing that. People will start dipping their toes in and start going after it. That's the easiest time to get into something when nobody loves it. It doesn't have any love. Everybody's talking trash about it, and it's so oversold. That's the time when you're like, you know what? This is absolutely a great time. Very low risk entry points. So pay it out pretty well.
I will say, It's also a weird like mental conundrum too, because if people are not talking about it, it's probably not at the forefront of people's minds, which means if you want to be on top of that stuff, you got to think about it for yourself. You can't just listen to other people and get reminded of stuff. You got to constantly watch and track. And that's where the diligence comes in, and that's where it pays off. Alrighty, gentlemen, I do have the final screen share of the evening. So for the folks at home, if you might need some help, the cryptocurrency landscape is changing extremely quickly due to significant amount of effort, but having a team and community can greatly reduce this burden. By joining our membership, you will be in our community to see what others are experiencing and gain great knowledge. You will also receive guidance from our team who will mentor you throughout your crypto journey. That's right, folks. If you want to join the private community, go head on over to walktheblock.ndf.com/membership-plans. That is where you can get in there and get access to the Telegram, where we do exclusive streams, exclusive chats, and you get access to the entire backlog of information and videos that we've been putting out. Making new content for all you guys out there. We greatly appreciate everybody that has joined already. Y'all are studs. We love you guys. If you have any questions about topics you've seen on stream tonight, hop in the Telegram, ask them there. That's where you get your best answers, and we can provide the most information in some good long form, whether it's written, charts, maybe a little quick video or a memo, voice memo hit, but we'll get to everybody inside of there. Gentlemen, excellent stream. Tracker, where can the folks find you? And what do you got going on in the near future?
You can find me here on Mondays. You can also find me in the DGen there with Jay and Dace and us when we do the daily streams with Jay's awesome TA work. We're always in there. We've been kind of taken aback this week for multiple reasons, but this week it's just been a lot going on. I think we're all kind of just waiting to see, this movement that we feel like is about to happen. But that's where you can find us there in the DGen Roundtable discussions. We also have Walk the Block personal channel with our members. And just to kind of reiterate on that, let's be clear here. Our member group that we're trying to pull people in here, we expect people from all different backgrounds, people who are going to come in, challenge us. We totally appreciate that as well, because it's only going to make us all stronger. So if you have a lot of knowledge, or if you're so green, you don't even know where to even begin to even buy it. Like you don't even know, you've never heard of Robinhood, you never heard of a central exchange. That's okay too. We've all started there. We're not some crypto snobs that we try to stick our nose up thinking we know everything, because we certainly don't. And everyone's been there. So we love to share the knowledge and spread the wealth. We are currently building out videos to help newbies that are coming on. But hey, you got to start somewhere, and better now than later, because the later you wait, the more things are going to move on you. So like I said, we're always here. And also that also helps sharpen our skills, because if you can't really explain something to somebody who doesn't understand anything, either A, you don't understand how to dumb the material down because of the terminology, the lack of the terminology, or if you can't really explain it, then do you really know the material well? So it helps both parties a lot to kind of fine tune it. So we encourage all levels to come in, because it's just going to be really fun, and we're going to build a really strong community where we can challenge each other to backtrack our theories, bounce ideas off each other, see new trends. Like I said, you can do a lot more in a community than you can on your own. I guarantee you that. Trust me, I've been doing stocks since the mid-90s, and I can tell you now, being in a community is such a breath of fresh air. It really is. You're in a team that has each other's back. So thanks.
Definitely. Dace, good sir. Where can the folks find you, and what do you got going on?
You can find me on x.com and on Instagram at Dace Northall. Find me in Walk the Blocks Telegram, and also in the DGen Roundtable Telegram. Speaking about the membership stream, we will have a membership only live Q&A tomorrow evening. And so if you are a member, please join. And if not, consider joining and come in and participating. Bring in any question you may have. We will do our best to answer it, and we'll figure it out together. And so come find us in those two places, in Telegram or on Instagram and x.com at Dace Northall.
Love to hear it. And by the way, shout out to Jemmy. Appreciate you guys all for tuning in. Folks, I am Zenith. You can find me over at ZenithDI on X and Instagram, and follow the show here over on both platforms at Walk the Block NDF. That is the handle for it. We post some good links, some good retweets. I might get on there and post some spicy comments on other people's stuff every once in a while as well. But that's where you can find all of that for the show. Outside of that, folks, we know the waters get rough, so don't say I'm alone. Thank you so much for hanging out with us tonight. And until we catch you guys next time, I hope everyone out there continues to respond